Man, oh man, what a day, what a week it has been. Boy, oh boy, another fantastic day comes to an end. And boy, what a difference a few hours makes, doesn't it? Boy, markets rolling over this afternoon. We have a lot to talk about in a very important video here tonight. I have a lot of great trades setting up on my radar for tomorrow. Got some breakouts, got some reversals, and you know me, I'm going to cover all my favorite trades in tonight's video to make sure you have a simple roadmap to make some money on Friday. Before we get this party going tonight, make sure you subscribe to our channel. That way you don't miss tomorrow night's video upload. And if you enjoyed the video tonight, do me a favor. Hit that like button. Give me a shout out in the comments section below. Always appreciate you guys sticking around late and tuning in to watch this video here tonight. So thank you so much for supporting the channel. But enough of the intro, Joe. Friday is right around the corner. And I'll tell you, with the moves we saw this afternoon, boy, like I said, what a difference a couple hours makes. Boy, everything feeling pretty bearish at this point right now. S&P bearish into a trading range. Nasdaq bearish into a trading range. Oil getting ready to roll over back into that range below us. I got some reversals off the highs on my radar here for tomorrow. Definitely have some reversals and of course some breakouts going lower. We may be in store here for rolling over and some breakouts going lower here as well. So lots of great short trades on my radar for tomorrow. We'll talk a little bit about the long side setups, but I'll tell you, you'll see tonight in the video tonight, it's not easy right now to find some good safe places to be a buyer. We're going to cover all the details. Don't you worry. You will have the game plan by the time we're done the video here tonight. Now, tomorrow's a Friday. Let's not forget, Fridays are, well, what do we always say on Fridays? The most important thing about a Friday is you want to get in early, try to leave a little position open into the lunchtime, into the afternoon, because Fridays love to run. Tomorrow we've got durable goods orders at 8:30. We got Bullard at 9:30, and we got PMI at 9:45. So we have just a peppering of catalysts tomorrow. Very excited. We almost always find some really good setups on Friday morning. Hopefully durable goods orders will get us going. We got James Bullard at 9:30, and oftentimes those PMI numbers, close to 10 o'clock. We talk about 10 o'clock as a very popular time for catalysts. So watching those times for tomorrow. And again, my kind of mindset on a Friday morning is try to get into trades as early as I can, take some quick profit, get rid of the risk, and leave a little position open into lunch, into the afternoon session. I'm not a huge fan of getting into new positions after lunch on a Friday, just because markets tend to be a little bit more impulsive and we are a little bit less disciplined on a Friday afternoon. Anyways, that's the mindset, game plan, and the news scheduled for tomorrow. Back to our charts though, because let's face it, the money is made on the charts. And of course, I'm going to go over all of my favorite trades on the S&P, the Nasdaq, and the crude oil on tonight's video. If you like making money, I would definitely make sure you watch all the way to the end of the video, because every trade I talk about can be applied to your favorite market. So don't just click off after I'm done with your favorite chart. I will tie all this together here tonight and give you guys a good roadmap no matter which market is your favorite. A couple things. First of all, upper left-hand corner, this is a 10,000 tick chart. You can see all the time frames in the upper left hand corner. They are all tick charts. This is the 21 EMA. It's not the only indicator that I use, but it's the most important one in tonight's video. And as always, keep in mind, I'm going to toss some 60-minute time frames and some 4-hour time frames linked up in the description of the YouTube video here tonight, and that will give you a bigger picture, a little more of a bird's eye view of the market. I use those higher time frames, 60-minute and 4-hour charts, to give me more of the market context, to find directional bias, and to find big turning points on these charts. So that's where you can get more information. What's the most important factor right now on the S&P? And then we'll talk about my favorite trades here for tomorrow. The most important factor right now is we have a bearish market into a trading range. Boy, the buyers got that juicy reversal off the low. It looked like the buyers had everything under control. And then I'll tell you right now, the sellers, they should be tipping Janet Yellen. Janet Yellen pretty much gave the bears everything they needed here as we went into lunch. But no matter what the reason was, the why doesn't really matter, right? The why is irrelevant. We don't care why the market rolled over. Again, the bears should be pretty thankful for Janet Yellen right now. But we're bearish right now into a trading range. And so I'll tell you, if you're a student of mine in my trade room, you know that these directional ranges, this is basically it's basically a directional trading range right now. These are pretty easy to trade. We see a lot of these across all of our favorite markets. My two favorite trades on the S&P and the Nasdaq are going to be reversals off of the high. That's one of them, and breakouts going lower. Now, there's going to be some variations, inside of those two, so we'll go over those here tonight on the video, but those are ultimately where I'm looking for my favorite trades here for tomorrow. So what I'm going to do now is let's talk about some reversals off the high, because there are probably three different ways we can trade that reversal. There are some different technical tools we can use or setups to trade that reversal, and then boy, I'll tell you, there are really three different ways we can trade breakouts going lower. We get a next big objective on the S&P. If the bears get their way tomorrow, they're going to want to take out that 3,900, that 38.97 and a quarter. So let's talk about the reversal off the high first. Later on in this video, we'll talk about breakouts going lower, and I'll tell you, I'm going to wrap it all together tonight on the oil, because oil is a great example of how we can apply the same principles. May not be the same situation, but the same basic principles on the oil. So you guys are in for a treat here tonight. So as we go higher, ideally what you want is, for a reversal, is you want to go higher. And again, I'm going to talk about if we go lower here. Don't you worry. I'm going to cover that as we go deeper into the lesson. But remember, we don't want to get in the habit of predicting, right? When you predict, you really limit yourself to how you can make money that day. I want to go over some different scenarios. That way the game plan is ready no matter what we get tomorrow. Now, I'd like to get that nice deep pullback. I'd like to go up around, I call these measured pullbacks, right? This channel high. I'd like to get up around some of these other levels of resistance up overhead. Now, deep pullbacks are great, and deep pullbacks give you lot of reward, right? If I can pick a top on this, right, I can get a bunch of reward for a relatively small amount of risk. But the problem is picking a top can be very difficult when you get those deep pullbacks. That's a lot of momentum, right? So rather than trying to pick the top and try to figure out what that top is, all I want to do is wait for some of these buyers to come in, let them show me, let them show me their cards, if you will, and then try to use their stops as fuel. This is a classic failure pattern, like you guys are learning in my free trading course. This would be a 2-try failure because of the size of that pullback, right? So again, I'd love to get a reversal off the high of this channel, and really in all reality, it could be here, it could be here, it could be any of these levels up overhead. I'd like to get it off the high of that channel. One of my favorite trades, which we talk about in the free trading course, is to rope in some of these buyers. Don't try to pick the top, look for that signal to short back down, and then as we're heading back into that range magnet, as we're trying to go back to retest the low, that's the objective, we can then go out and find a new trend line off the low, market off the high, and as I always say, we look left. I like to find prior swings and look for things like bull traps above prior swings, the trap setup, like you guys are learning in the free trading course, maybe a failure pattern above the moving average into a possible pullback combination. These are all the same setups, right? You guys are learning in the free classes right now, right? So as we go up, again, not going to pick the top, but let the buyers try a couple times and use their stop losses as the fuel to turn this thing back over. And as it rolls over, I'm looking for bull traps, looking for buyer failures, right? Looking for pullback combinations. You know how much I love those failure into pullback combinations. Now, keep in mind, sometimes we don't get that kind of beautiful failure off the high. If we were to go up and then, all of a sudden, sudden we get this crush back down again. If there's so many bears up here waiting to short up here, now we want to think about that V top. And oftentimes these V tops can be tricky because, again, there could be so many bears up there. It may get smoked and may run back down again. If that's the case, and I know this is frustrating because we want to short as high as we can, promise me though, if it V-tops like that and grinds back down, I'm not going to chase after it. I'm going to mark off a trend line off that low. I'm going to pin a channel off the high. Are you seeing how I'm doing this right now? Then we look left. I find swings. And, like we always say in my free classes, the first test is the best test. This could be a bull trap like I'm showing you right here. It could be a buyer failure. It could be a pullback combination. You guys are seeing examples of those in the free trading course, which reminds me, I know that a lot of you guys and gals are making money with the lessons you guys are learning in the free course right now. You're learning all the entry tactics, right? How to find channels, how to use ranges. But hey, if you're here for the first time today, if you haven't taken the free trading course and learned all these setups, what I'll do is I'll put a link up here for you in the upper right-hand corner. Grab that link and take my free trading course, because I'll tell you, the strategy you'll learn in that free video series will teach you a simple trick to know exactly where the best winning trades will be each day. And I'll teach you 4 entry patterns, my 4 favorite entry patterns to help you start making money on your own account. If you're missing the best trades right now, if you're not getting the results you want out of your trading, definitely grab that link, take that free course. It is perfect for someone trying to make the jump into full-time trading or get another income stream or get some more consistency in your trade results. Now, another very common scenario is we may end up going higher here. It's very difficult to want to buy up here. And that's just because looking at the bigger picture right now, there's going to be a lot of bears, I assume, waiting up over those highs here. We may end up running higher. We may end up pulling back, and the buyers might have enough strength on them to hold that pullback and retest that high. If that does happen, remember, more experienced traders are buying that dip. Once we go back up to retest the high, now we can look for those classic double top reversals. Buyers once, buyers twice. We still want to use the 2-try rule on this because we're still pretty bullish in the short term. But again, range below us, lower lows, lower highs. It's difficult to want to be a buyer up here. You're buying pretty high. That's the challenge we have right now, is in order for us to get the buyers back in the game again, we've got to put ourselves right up around some major areas of resistance. And so once I see those buyers coming in trying to buy a couple more times into that high, again, think about where those stops are. And that's exactly this is the reason why I love to use failure patterns, because I don't want to try to pick that top, right? Because who knows, right? It may keep going, and then we might get the 1, 2 back. You know what I mean? I don't want to pick that top. I want to wait and see what the buyers are up to. And then once I see what they're doing, now I know where your exits are. Now I know where your pain is. And we know those buyers are in a lot of pain. Once that fails, these oftentimes will punch lower, 2-try failure, and then again, grab that low, find that channel. And what I always tell my students is, you might not have the confidence or the knowledge yet to grab the reversal off the high, but you don't want to miss that first test off that channel. You don't want to miss the first test off that channel, because at that point now all the momentum is rolling over. The hardest part about it is not chasing it as it goes lower. Believe me, that's easier said than done, right? It's very easy to get wrapped into FOMO down there and go, shoot, I missed it, and you're chasing. And you're probably also using a small stop on that as well. And right when you get stopped out is right when it rolls back over again. So the hardest part about that one is not chasing it as it goes lower and just simply find that channel and wait for it to pop up. You'll be rewarded for it. And once you see that work a few times, you'll be incentivized to wait. I'm always telling my students in the trade room, stay patient for it, wait for it, and then bam, right, the short off the high there. All right, so now we got a pretty good game plan now of how to kind of short this thing, right, as we're going higher. The next thing I want to talk about now is if we roll over, right? If we roll over, because that is also a very possible or very, very odd, very, very high percentage possibility here for tomorrow. Why don't we grab a look here at the Nasdaq? The NASDAQ is, I would say the NASDAQ is a little bit less bearish, a little more bullish than the S&P. I think you'll see why if you go in the description of the YouTube video. You'll see the NASDAQ is more bullish. For example, on the 60-minute time frame right now, the NASDAQ is basically a bullish range. But when you look at the 4-hour chart on the NASDAQ, you'll notice we're way, way up, right, at that major objective. You'll see what I mean, right? So the NASDAQ is definitely more potential bullish than the S&P. The S&P does not look very good right now for the bulls. You'll see again when you go and look at those bigger picture charts here, especially that 60-minute chart on the S&P. The NASDAQ, a little more bullish. But again, it's very difficult on that 4-hour chart. You'll see it's very difficult to justify well, here's the reality. We have this big move down in that trading range. So right now, the only way I could justify being a buyer would be we have to see a big shift in momentum. The problem is to get that big shift in momentum, it puts us right into these levels. So the buyers have a lot of work in front of them. I also don't want to buy down here, right? I don't want to buy as it goes lower because now we've got all that momentum. It's like I said earlier, it's not easy to find a good, safe buying opportunity. The buyers have some work to do tomorrow if they want to get us to trust them. So the key component right now in the NASDAQ is we're bearish into a trading range. You can definitely see the NASDAQ, again, the S&P rolled all the way over, made that lower low. The NASDAQ is more of like a balanced trading range. So the same game plan is in play on the NASDAQ, right? As we go up, I'd love to get that pop up. I'd love to rope in some of these buyers, use stops as fuel, and back down again. In all reality, probably the best shorts in the NASDAQ probably come way up here. It may be bullish in the short term and then dropping in off those highs. Again, though, I have zero interest in buying up there. That's the problem, right? That's the problem. Anyways, let's talk about going lower. So the same game plan going higher here on the NASDAQ. The only difference that I see on the NASDAQ is you got to be a little bit weary of that 78 level, right? Again, the S&P doesn't have that problem, right? The S&P, if we roll lower, we've got blue skies, green grass, open seas, whatever the heck you want to say, right? 3,900, right? Pretty wide open space if it can crack lower. The NASDAQ has a little bit more of a headache potentially around that 680 level, but you've got that key, what's that, 12,525. Look at that low right there, right? So you know if they can rip this thing lower, that 525 level is where they're going to want to go here for tomorrow. The key component on this, okay, there's one kind of key mindset that you want to have whenever we have, and again, remember, this is a directional range. It's a bear move into a range. So the mindset that you want to have right now is if we end up going lower before we go higher, but as we're going lower, I want to look for traps on the way down. As we start getting lower down the chart, I now want to start thinking about pullbacks to sell low, to sell high, right? So this is the mindset, and I do a pretty good job at kind of illustrating for you guys. But if you understand the basic mindset or the principle that you want to look for tomorrow, remember the market's going to get ugly. Nothing's ever perfect the way I paint this picture, right? You got to be able to look inside of it and kind of go with the gray stuff. Anyways, so as we're going lower, looking for traps, right? Looking for basically bull traps as we're going lower. And then as we start taking out this low, as we start to accelerate and run lower, we then want to start thinking, okay, now we're probably too low down here, right? Now we don't want to sell very low. Now we want to wait for that deeper pullback and try to get that short off the top of that channel. So kind of the idea behind this is as we're going lower here, and remember, in a bearish market into a range like this, the market's going to want to swing, right? Remember we talked about this last night. This is what you call a slingshot, right? Or a pendulum swing. As it rotates off the high, this becomes very strong for the bears. So as we're let me get rid of this here for a second, kind of clean this up here for us. Let me get rid of that. Just kind of keep it simple here. So as it rolls lower, you're thinking about, okay, on the way down to that low, right? I'm going, okay, find prior swings, right? And I'm looking for those trap entries as we're as we're going lower, right? As it rotates off that high. This is the same exact situation, by the way, for the S&P. All right, so same scenario for the S&P. I would love then, once we start getting this thing accelerating, going lower, is then start thinking about, okay, where's a bigger channel? A lot of times you're going to look back at some of these prior lows and grab a low like that and bring it down like this, and then wait for that pop up that will oftentimes get you above the moving average. Once you're above the moving average, now it's pretty simple. Wait for the buyers to come in, let them try to buy. You get them right where you want them now. Nice strong move down. Strong moves love to retest those lows. And of course, once those buyers try, I mean, you got them, right? You got them. Once their stops are in, now it's a failure. It's a pullback combination, and we're looking for that retest of that low. And again, on a Friday morning, Friday afternoon, you're leaving a runner for sure, right? Because you know there's potential that it might run. So this is the general kind of mindset, the general game plan for tomorrow. It may be more aggressive, right? They may really shoot this thing lower, start grinding down like this. We might find a smaller channel here and be able to use some traps off that channel there, right? And then, again, find those bigger channels like this, wait for that pop up. I know it's kind of confusing the way I'm drawing it right now, right? Get popped up, trap in those buyers, and then back down from there. As long as you understand the key principles of this, right? As we're going lower, looking for traps. As we go too low or too far, and I'll help to kind of fill in the blanks on that as far as what the actual definition of too far is tomorrow morning in the trade room. Then we look for that deeper pullback, right, for that big bounce off that channel. The only other kind of variable of this right now would be what we call a 1, 2, 3 breakout. So let's say for example, we do end up rolling off the high. Maybe we find entries on the way down, maybe we don't, right? But then as the moving average comes over now, right, we don't keep sliding. We pull back and we jump off that moving average. Remember, we call these 1, 2, 3, in this case, a 1, 2, 3 breakout, right? So it's a range market. So of course we go lower, pull back, and we blast off of that moving average. Remember, in this situation, and this could be a trap entry, right? It could be a trap entry. If it is, great. If not, though, we find that channel, we mark off that channel low. And this is that same technique I mentioned earlier. We look for that pop up. I want that first test. Okay, the bottom line is I want the first test off that channel because the first test is usually the one that really lights up the best. It could be a trap pattern like this one. It could be a failure pattern, right? Could be a pullback pattern combination as we go. Now, the good news, the good part about a 1, 2, 3 breakout pattern is we can then measure the size of that breakout leg. And remember, a lot of times these 1, 2, 3, right? A lot of times they go lower. They pull back to that moving average. They blast off the moving average, right? We're already pretty bearish to begin with. We find that channel. We mark off those highs. We look for any entry pattern I can take off the high of that channel. And then at this point, the first leg, right? That's your breakout leg. So you measure that leg. And then once you have that first pull back to that channel, you lock down the third leg, and that's going to give you the kind of the runner, right? First leg is third leg. Okay, trends love threes. They love to go 1 leg, 2 leg, 3 leg. The first leg and the third leg are almost always symmetrical. The middle leg is oftentimes a bit bigger, a bit smaller, and you know which one is which when you connect these two at the channel. It's simple, but it's not easy at first. I totally get it, which is why we have a trade room, and we do it together every morning at 8 o'clock Eastern time. So we're going to keep an eye on that setup as well, that 1, 2, 3 move. And number 2, if this thing slides and starts to grind, you know what to do, right? Those popping grinds are easy. Mark off that low, mark off that high, right? And then again, click, look for that first test and short. Could be a failure, could be a trap right off that high. First leg, third leg, same principles there. So you can see there's a lot of ways to trade breakouts. Again, if we start rolling over here, right, the game plan is traps, right? The game plan's traps. Once we start getting down the ladder, we start looking about those bigger channels and short off the top of that channel. If we get a pop and grind, right, break down, grinds down, relatively easy there, right? If it drops off the high, pulls back to the moving average and just jumps off that moving average, no grinder, right? Then we mark off that low, mark off that high. These are pretty, relatively simple game plan, right? And again, we're just going to simply make sure we wait for the proper setup tomorrow morning, try to get in as early as we can, and sort of leave a runner as we go into lunch, because Fridays, they love to run. And based on the week we've had so far, boy, it's been a great week so far. Looking forward to tomorrow in the trade room. So NASDAQ's ready. S&P is ready. Let's see what oil's up to here right now. We talked a lot about this last night, anticipating a reversal off the high of this range right now. Oil is pretty straightforward, and you'll kind of see you'll see that we can kind of wrap this all together tonight on the oil right now. There are three big clues in my eyes. One is the trading range. Right? One is the range, and this is nothing new. We've been talking about this all week, right? We had that reversal off the low of the range earlier, completed that beautiful pendulum swing going higher. So the range is a big part of it, right? Now we're expecting the range to rotate back down, right? To complete its rotation. The next objective right now is ultimately the other side of that range around 67.30, right? If you go in the description, you'll also see, too, in the description of the video tonight, I have a 60-minute chart, and you'll see right away there's a bigger range on the 60-minute down here. So there's a lot of reasons to like this thing dropping back into that 67-ish area here for tomorrow. That's one very big clue. Another important clue is this was a pretty strong move going higher. What do we always talk about whenever we see a strong move in one direction? We expect a retest of that, in this case, of that high. Then what? Yeah, then rope in the buyers, right, and short off that high. So we always call this mission accomplished, right? Because we know that, well, for example, if we had made a strong move up like this, we'd really have to kind of keep the door open for a retest of that high. We already have the retest now. So now there really isn't any, well, at least we know right now, things can change overnight. We live in a pretty wild world right now. The situation in Ukraine, in Asia could easily affect oil overnight. So, it is a fluid situation, as they say. But right now, though, unless something changes, there really isn't any objective left for the buyers. The third thing is you'll notice the market separating off that moving average with a strong run down. What happens when we see markets push stronger and separate off the 21? We usually see those are called strong moves. They love to pull back and retest. In this case, pull back and retest going lower. So range below us. Strong move up for the buyers has already retested. Mission accomplished for the buyers. And now the bears have a strong move going lower. Now think about how do we put this all together and make some money? You'll notice as we're going lower here right now, what do you think the bears are thinking? Yeah, they're thinking about traps, right? They want traps, bull traps above that high. As we go lower, what do you think the game plan is as we go lower? We don't want to sell low. We now start to find bigger channels. You got it. And then bounce back up and sell off of that high. So just like we talked about a moment ago on the NASDAQ, we're pretty much getting that scenario right now. So as we start rolling lower, you can almost guarantee there'll be a lot of bears out there who will be looking to get into positions, right, with those bull trap setups above the high. And then if we end up going lower here, right, we then go out, find some larger channels, find those bigger channels out there, pop it up. Again, as always, get above the 21 moving average, get those buyers to come in, try to buy it and sell into their stops with a failure, a pullback. Again, you guys will learn more about these entry patterns, specific entry patterns in the free video course. And again, right, we're thinking 67-ish, that low of that trading range here for tomorrow. Now, there's obviously some different scenarios we need to be prepared for here. For example, what if we don't get a good trap signal above these highs? What if the market was, what if it was to pop up right away right now? What do you do then? Well, the channel's already there for you. That channel's already there for you. We just, again, remember, we don't pick the top, right? We wait for the buyers to come out, let them try to run this thing higher. Maybe they will, right? I don't know. I don't have a magic a wand or crystal ball. All I know is where the odds are stacked in my favor, and right now the odds are not stacked in the buyer's favor. If they try to buy off that, now we have them pinned, and now if they fail, again, we're not picking the top. If they fail, though, now we can short into those stops for that run going lower. And imagine we run lower off that. We should grind down. People are going to be jumping in off those traps, right? So if it does pull back deeper, a buyer failure into those traps, as it goes lower, we start finding those bigger channels, rinse and repeat over and over again. The only other variable is, this is a relatively strong move overall. Usually in range-bound markets like this, the strength of that move can disappear in a second, right? It can. So there's always a chance these buyers may come up and they may punch this thing back up to retest the high. You will see on the 60-minute chart in the description of the video tonight, you will see it's very difficult, a lot like the S&P and the Nasdaq. There's a lot of resistance up overhead in an overall bear market. Very, very difficult to want to buy up there. I would much rather wait for those buyers to dig their own grave, wrap that noose around their neck, and simply look to short into those stops for a run back down. In all reality, that could be a very profitable trade for folks tomorrow if they were to go back up, start running into some of these triangle highs, these 45 highs up here, roping those buyers and get that run. Also, remember that V-top we talked about earlier? If they run up, right, V-top, pop down. I know it's tough, right? V-tops are tough because you don't want to pick a top. But also, too, you can't chase after it as it goes lower. So we go out, find that new channel, and we start thinking about, okay, just give me one shot, right? Give me one pullback off that channel, target a course back down to retest the low, and again, leave that runner back into that trading range. All right, guys, I think that covers most of the bases here for tomorrow. Like I mentioned before, I do my best to anticipate these, but we may see some variations of this tomorrow morning. So make sure you're there tomorrow morning, bright and early, 8 o'clock Eastern time in our trade room. You will love it. We have our members making some really, really great money right now. It's been a great week. It's been a really great year so far. Wrapping things up here for now, though. Hope you guys enjoyed the video tonight. Hope you use this knowledge to make a killing tomorrow on Friday. Don't forget, if you want more information about the free trading course or the trade room and membership, or if you want any more information, all the links I've talked about are linked up in the description of the video. If you need any help along the way, the easiest way to get help for anything we talked about tonight is to call the office, send me an email, use live chat. We're pretty much always available to help if you reach out and ask for it. In the meantime, have a great rest of your evening. Thank you so much for tuning in tonight. Hope you enjoyed it. Hope you use this knowledge to make some money tomorrow. And I'll see you tomorrow morning. If not tomorrow morning, you better be here next week. The end of the month of March, last week of the third month of the year. We're going to see some fireworks next week. So looking forward to it here. Have a great day tomorrow, guys. Be well, be nice to each other, and you better be here on Monday night. Adios, amigos. Bye-bye for now.